Morning and welcome to this morning's edition of the MPC Markets Morning Call, 26th of November 2025. It's a bit of a turn up for the books, but, Nvidia had to be carried for the first time instead of carrying the market. There a little bit of softness or a fair bit of softness over the last couple of days, just on the back of the fact that, Google's is signing a deal with Meta to start supplying their AI chips from 2027, sorry, not 2025. And that's broadly weighed on sentiment towards, towards Nvidia overall. We discussed yesterday what the difference between those TPUs and those GPUs were. If you missed it, go back and check out yesterday's podcast, go into it a little bit. We really did have, Nvidia for the first time ever being carried, or first time in a very long time. So the Russell of it, the interest rate sensitive Russell, which is the small caps index, really benefited from rate cut expectations going a further 10% to 80%. We've got that Fed meeting coming up on the 9th and 10th of December. You can see Russell has gone back into strong buys on all the technicals. We're still sitting in neutral territory for the Dow, the S&P, the NASDAQ, we're still probably a little bit spotty in the Asian markets overall. I think the ASX, particularly the tech sector in the ASX, is starting to offer a little bit of value. The likes of Wise Tech, Technology One, Zero, Block have all been hammered really hard. You're starting to see a broad-based momentum shift from fairly strong selling back to, like as I say, as we can see here on the dailies, back to neutral in the US indices. There were other sectors as well overnight that really were buoyed quite nicely. The healthcare sector, particularly, which we've talked about on a number of occasions, about being in fairly depressed territory over the last sort of 6 to 8 months, which is pretty abnormal for for that sector. And we've been buying over the course of the last few months, that the healthcare sector really starting to show signs of life for a change. And as you can see here as well, Meta up 4%. And Google up 1.5%. That'll be on that deal. But it's rumored to be about the TPUs are rumored to use significantly less power, which obviously is a massive selling point because they're struggling to find power capacity for the Nvidia chips. But apparently it's about a sixth of the cost for the actual chip as well. So don't quote me on that. There's just I don't think there's been made public details of the deal necessarily, but I mean you sort of get the point, right? They're significantly cheaper. AMD dropped a bit, Nvidia dropped a bit. Saw those incumbents. Oracle's still looking a little bit horrendous as it stands at the moment. I'd say that people are pretty concerned about that debt. I didn't see what was going on in Netflix. Had a bit of a bounce back in the Walmart, the Home Depots and things. That'd be just on those lower rate expectations. But no other massive reason, because we did have retail sales numbers last night come out in the US. Expected at 0.6, came out at 0.2 only. That's what's lifted the rate cut expectations. We do have the PCE price index due next. I believe it's tonight. They are tentative, these numbers at this point. So if we get a lower than expected number there on the PCE, which is the Fed's preferred inflation indicator, it's the price consumption index and personal consumption and expenditure index. If we get a high reading in that, that's going to take rate cuts off the table, and you could see a lot of this, this green, disappear very quickly. So we were last week at expectations of 20% only for a rate cut, and then we had Williams and Waller go a little bit dovish and earlier in the week, and then this retail sales number being a little bit slower. Is obviously, really buoyed the hopes of that rate cut. market's going to be super disappointed if we don't get a rate cut. It'll be interesting to see if that sort of blindsides them. We've got another payrolls number due, hopefully before the 10th of December. If that shows strength again, all of this optimism could get taken out of the market pretty darn quickly. I don't think we will get a positive number. The next one will be October. Just pretty basic back of the napkin calculations of layoffs in the S&P 500 alone. It could be 200,000 to 300,000 just from those companies. As promised, I'm just going to focus on some broader context and a little bit more detailed in company news. Just this week, while we've got Thanksgiving going on, and there's not a hell of a lot happening in terms of in terms of market news, and we don't know when the figures are coming out, etc. So Amazon's betting big. They made a couple of announcements in pretty much the last week, really. So they've announced they're investing $15 billion in a new data center campus in northern Indiana. It's about 1,100 jobs, and that's on top of previous multi-billion-dollar outlays. So they did have, I think they've already invested in $11 billion in the region last year, and $31 billion in the region in the last 15 years. So they've struck an agreement with the local energy provider. So they're going to have sufficient power for residents and the data center. So they're pretty important the residents get power. And look, these capital expenditures are part of a broader industry trend. Everyone's spending big, but just to give you some context, Amazon spent about $80 billion last year. They've announced plans for the next year at around about $135 billion. So we're looking at, it's a 50% increase essentially, and very much capped by how much power all these guys can get. They are structuring major energy deals around it. So sort of in line with our hyperscaling AI strategy, which was about this rapid expansion of the data centers. We had one part of the strategy that was based on power and power management with the likes of Oklo and small modular reactors and Vertiv, which does the power and power management. We also had copper and things like so. What you need to build these data centers up and take advantage of this capex spend, not necessarily buying the actual hyperscalers themselves. So yeah, I think that infrastructure play is going to be something that plays out for the next few years. And then potentially start to peter out. But they did, in addition to these regional investments, they did announce plans to spend $50 billion on AI and supercomputing capabilities for US government cloud customers through Amazon Web Services. That's another 1.3 gigawatts of advanced computing capacity. For a little bit of context there, the Northern Indiana project is 2.4 gigawatts and 1,100 jobs, and obviously that's a $15 billion investment. So this $50 billion is obviously it basically helps them specialize their AI services like Amazon SageMaker, Amazon Bedrock, foundation models like Nova. Anthropic, Claude, it's all really based to help maintain their leadership in that AI race for government contracts and data sensitivity and compute, etc. Which Amazon has got pretty well not locked up, but has got a pretty good stranglehold on at the moment as well. So and this is what people are talking about. And tomorrow, what I'm going to go into is the amount of debt and debt deals that have been done by these companies over the course of just the last couple of weeks. It's eye-watering. Like, it seriously is. There's a fair bit of debt out there, and that's what the market's starting to get a little bit concerned about overall. So, because what generally happens with CapEx spend is everyone rejoices in it in the thematic and the the prospect of new business. And then they've got to go and actually build it. Sort of like what happens in mining companies. Everyone gets happy about the discovery of a certain deposit, and then the arduous task of the 3 or 4 year task of getting to the mine, actually getting into production, like the data center into production here. Is very frustrating for investors overall, and that usually involves more cap raises and things like that. Probably won't affect the hyperscalers because they're sitting on a lot of cash and they've got other businesses. So I'm not going to say that the Mag 10 is a junior miner, but I'm just trying to give you a bit of an idea of how investment psychology cycles run when markets get impatient and don't see an immediate return on that capital. So there, 50% upping in CapEx expenditure for just Amazon alone. Obviously, is at 135 billion next year. It's pretty significant, and I'm sure they're going to make it back in the long term. But that's it's a lot going out, and in terms of the pointy end at the consumer base, there's not a lot coming in terms of monetizing. It's really just been these guys, playing amongst themselves. The calendar, really, we don't need. PCE, hopefully. We got Aussie CPI today. That's expected at 11:30. NAB expectations are 3.6% year over year. This is the first monthly number, which is fully complete. So the monthly numbers have been like the Diet Coke version of the quarterly numbers. This is the first run of the monthly numbers that is, that's now going to replace the quarterlies and is in full. So it'll be pretty closely watched. We had earnings from Symbotic last night, one of our favourites here at MPC, in some of our structured products. It was up 40% overnight. As they absolutely smashed earnings out of the park. They're robotics and AI. They do a lot of the logistics and warehouse stuff for Walmart. I believe they got some Amazon contracts as well. But they absolutely just belted it out of the suburb, not even out of the park, and heading back up towards record highs around about the $78 mark. Got a number of upgrades, and I think that'll be a continued wealth winner, particularly with the tailwind of AI robotics coming in the next few years. So and then we've got Thanksgiving at the back end of the week. So the markets will get generally pretty quiet and very light on volume. I would imagine it will be open on Friday for a half session. There's sort of rules around the US market not being shut for 4 days consecutive. But Thursday will definitely be, it'll be like standing in the desert. And as far as the commodities go overnight, obviously US dollar dropping on about 0.4 on the back of heightened rate cut expectations. Rate cuts are not good for the currency. And then look, crude was down a little bit. I think that was on some, on the Trump administration widening some, or getting rid of some environmental things to start offshore drilling and stuff like that, and more supply. Coal was down a little bit as well, down 0.5%. But uranium bounced 1.5, lithium jumped 3, Bitcoin was down 2. But look, nothing much to massively report, I've got to say, in terms of the commodities market at the moment. Copper up about 3% of the week. That's snuck up on me a little bit, actually, I've got to say. And it's towards that $5.15 a pound mark, and hovering around those record highs. So I would imagine that would maintain positive momentum. And that really wraps it up for today. We will, it'll be interesting to see. We won't be really taking too much attention to the price action for the rest of the week. Still, and after this PCA number's done, because it'll just do what it'll do and drift back and forth in thin markets. And we really won't see volume come back until next Tuesday. So sort of take it as a bit of an opportunity to review your portfolios, take stock. If we start to break up from here in the S&P further, our pick's sort of around, that Aussie tech's lagging. There's a few of the Aussie stocks that are lagging and really haven't recovered from last week's sell-off in the US. So we've got a keen eye on a few things here and there, which we think are pretty decent value, and you can at least start having a bit of a nibble at. Small caps as well, in particular, the amount of M&A activity and the amount of Macquarie making a bid for Cube, and there's bids for potentially for Iris. I think we're at high levels of private equity taking over small caps, and the small caps index is sitting at around about a average 13 PE in a range of 12 to 25 usually, so on the cheap side of the range. So if you've got the stomach for it, don't let private equity just keep delisting things and having a feast on really quality cheap companies. There's a bunch of stuff out there that's still, if you're willing to do the work, or you want to have a look at our small cap recommendations, there's some definite value out there if you've got a little bit of patience and a little bit of discipline. So have a great day, people, and we will chat again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.